Hello, and thanks for tuning in to our weekly mortgage and economics segment. I'm Megan Abdelaziz, Real Estate SINY.com's mortgage and economics reporter. The mortgage rates stayed relatively the same this week. The 30-year fixed rate stayed at 4.27%, the 15-year fixed rate went up to 3.38%, and the 5-year adjustable rate went down to 3.26%. With the stock markets back on the rise, the U.S. Treasury bond yield staying low, and the Federal Open Market Committee continuing with the QE3 program, the mortgage rates didn't move around too much. This week, we have a bunch of reports to look at, so let's jump right in. In the financial markets, the stocks started to move back up, and the Treasury bond yields didn't move too much. The Dow Jones went from about 15,414 at opening bell Thursday, October 24th, and by closing bell on Wednesday, October 30th, it was up to about 15,618. The S&P 500 went from about 1,747 that same Thursday to about 1,763 by that same Wednesday. The 10-year U.S. Treasury bond yield went from 2.51% that Thursday and was up to 2.55% by that Wednesday. Next, we took a look at two recently released housing market reports. The first report was released on Monday, October 28th by the National Association of Realtors and was on the pending home sales for September. In September, the pending home sales index dropped again for the fourth month in a row to 101.6. The index is also 1.2% lower than it was last year, which is the first time in 29 months that the index was below where it was the previous year. The second housing market report was from the S&P Dow Jones Indices and was released on Tuesday, October 29th. This was the S&P Case-Shiller home price indices for the 10 and 20 city composites in August. In this report, both the 10 city and 20 city composites increased 1.3% from July to August. And compared to last August, they are both 12.8% higher. The home prices in New York saw a 1.1% increase between July and August. After the housing markets, we took a look at the two government economic indicator reports. On Tuesday, October 29th, the U.S. Department of Commerce released their report on advanced monthly sales for retail and food services in September. According to the report, in September, the retail and food services sales dropped to $425.9 billion, but they are still 3.2% higher than they were last September. Next, the Bureau of Labor Statistics released their Consumer Price Index report for September on Wednesday, October 30th. In September, the Consumer Price Index for all urban consumers increased 0.2%, and it was mostly due to the increase in utility gas services. After those two reports, we took a look at ADP's employment report and the Federal Open Market Committee statement. ADP released their private sector employment report for October on Wednesday, October 30th. According to ADP, there were 130,000 jobs added to the private sector in October. Out of the jobs added in October, about 37,000 jobs were added to small businesses, 13,000 were added to medium businesses, and 81,000 were added to large businesses. Along with the jobs added for October, they also revised the amount of jobs added in September, which dropped to 145,000. The Federal Open Market Committee held their meeting on Tuesday and Wednesday, October 29th to October 30th. The statement from this meeting was released on Wednesday, October 30th, right after their meeting. According to their statement, the Federal Open Market Committee decided to continue with their quantitative easing program for a while longer. Even though there were increases in spending and investment, there is still a lag in the labor market and the housing market, which helped the feds decide to keep their asset purchases going longer. Until the Federal Open Market Committee sees stronger economic information, they aren't going to be getting rid of the quantitative easing program. Lastly this week, we took a look at Americans' confidence in the economy and the mortgage applications that were put in. First, on Tuesday, October 29th, Gallup.com released their Economic Confidence Report for the week of October 21st to October 27th. According to this report, Americans gained more optimism in the economy this week. Their poll on Americans' net ratings of economic outlook showed that 64% of Americans think the economy is getting worse, and 31% think it is getting better. Their poll on Americans' net ratings of current economic conditions showed results of 43% of Americans feeling that the current conditions are poor, and 16% feeling that they are excellent or good. The results from these two polls gave Gallup an economic confidence index of -30 for that week. On Wednesday, October 30th, the Mortgage Bankers Association released their weekly mortgage application survey for the week ending October 25th. In this week's report, their market composite index increased 6.4%. The refinance index increased 9%, and the amount of applications put in for refinances increased up to 67%. With the government shut down, a good amount of the reports that were released were affected, showing a drop in many indicators. But with the government reopened, we will hopefully see better numbers next month. The Federal Open Market Committee helped keep the mortgage rates low this week, and with their next meeting not until the middle of December, we should see the mortgage rates holding somewhat around where they are now. So make sure you check back with us next week to see where the mortgage rates go next. Thank you for watching, and be sure to like us on Facebook, follow us on Google+, Twitter, and Pinterest, and subscribe to our YouTube channel. Also, don't forget you can read the full mortgage and economic report on TrendingSINY.com, which is a division of RealEstateSINY.com. RealEstateSINY.com is a full-service real estate brokerage located on Staten Island. If you're looking to buy or sell your home, you can contact us at 718-966-9669, and one of our experienced agents will gladly help you. If you simply just want to browse the latest listings or keep up with the market statistics, you can visit our website at realestateSINY.com.